Hello and welcome to Simply inTAXicating. Apart from several changes made in the Central Excise and Customs, the Budget 2016 also unfolded many interesting changes in the service tax regime. To begin with, Mr. Jaitley proposed a new levy called KK Cess, Krishi Kalyan Cess, in addition to what was notified last year as Swachh Bharat Cess. Such cesses in place of higher tax rate generally tend to result in serious accounting problems for the assessees. However, Mr. Jaitley also offered some relief by hiking the monetary threshold for invoking the arrest provisions in this budget. There are many more such proposals which need to be debated. To know the key changes proposed with respect to service tax, let's go to Mr. Vijay Kumar in Hyderabad, who has 5 seasoned indirect tax experts with him. He has Mr. C. Vijayanand, JGM Finance from L&T, Mr. S. Thirumalai, former President FAPSI, Mr. Vinit Kapoor, Director Finance, My Home Industries Private Limited, Mr. V. S. Suresh, Director Corporate Finance, and Mr. N. V. Raman, Director Indirect Taxes, Grant Thornton.
Let's see this 0.5% Krishi Kalyan Cess. You were mentioning in the beginning about the accounting software issues. So now, for example, we have this KKC is convertible. Your Swachh Bharat Cess is not. What are the problems and confusion that you visualize in these two cesses which we may have to pay?
In the SBC, it is treated as a cost today. So,
Yes.
the problem is straight away solved. Whereas in the case of KK Cess, it is VATable and you have to use that VAT only to pay KK Cess. Earlier, you had an higher education cess and secondary higher education cess,
Exactly.
which is now abolished, but the credit continues to be there, which I cannot use it for any other purpose. So, like this, introducing one more element and the industry has to go through the issue of configuring and complying could have been avoided.
0.5% or something is added only to avoid sharing it with the states.
I agree. I think so to an extent, that's what we said, like whatever the simplifications we have done to move forward, to make easier doing business, I think this is one step behind taking back and putting some extra burden on the industry for the compliance. I think so what you are saying is if you have added that as part of the service tax, that would have been much more easier for the industry.
See, this cess, we have had 13 cesses which are going to be collapsed or have been collapsed, less than 50 crores. We have had sugar cess, jute cess, tea cess, and the perennial problem of whether it is an excise duty or not. Renuka Sugars is still being tested in the Supreme Court. We don't know what will be the final outcome insofar as that is concerned. So, given that confusion which is still available, apart from accounting complication, apart from standalone computations that you need to make outside the ERP system, this confusion on cess itself has not been removed. So that whenever there is this question of cess on cess, which was there earlier, particularly when you use for captive consumption,
Yes.
these items. In fact, there are cases, concrete cases where captive consumption is fully exempted as far as excise duty is concerned, then this cess is paid. On this cess, will you have to pay cess in respect of captive consumption? Is it excise duty? That question, why do you leave it looming large? The entire captive consumption will have this problem of wherever that cess is applicable in the context of KK.
So,
Although it is in the context of service tax, but still where the valuation issues do take into account, then we are still having this problem. In the context of sugar, in the context of various other industries where internally these are being used, and you should have clarified saying this is excise duty or this is not, or similarly this is service tax or this is not service tax.
No, but instead of that, sir, couldn't it have been much simpler that these two cesses are also dumped along with those 13? Like you abolish so many cesses and then you introduce more. What is the logic behind that?
See, the slightly larger problem would be as a part of a transition to GST, the government will definitely make way for transitional provisions as to how the piled up credit needs to be handled. But what is today happening to education cess which is piled up is known to everyone. Tomorrow, the end of the day, be it a Swachh Bharat cess, at least in the case of SBC, we know it's going to be a cost. And therefore, it's treated as a cost. But today, we're going to call, the moment KK cess gets imposed, we know it's going to be available as a credit. But what's going to happen to the pile-up of the credit? To that extent, I would say yes, the KK cess, rather than being levied as a cess, could have been actually levied as a service tax itself, rather than as a cess. But of course, when the government gets a kitty as a cess, it is much easier for them to use that kitty for the intended purposes without getting into that. Education cess to be used for the education sector, or Swachh Bharat cess towards cleaning India. Similarly, a KK cess towards the intended purposes could have been the intention behind that.
There's no separate account being maintained for these cesses. In fact, I asked the government under the RTI how much education cess has been collected and how much has been spent on education. They replied to me that they don't have an account of how much secondary and higher education cess has been collected by the CBDT and CBEC, and the entire money is going to the Consolidated Fund of India, from which what they say is, as far as education cess is concerned, the charged and voted amount for the HRD ministry is more than the education cess collected, which means the education cess has been transferred to the HRD ministry. And we don't know what is going to happen to the Swachh Bharat cess. If half of that money was collected, maybe our country would have been much cleaner. That concept of collecting something for a particular purpose and using it for the particular purpose has been done away with.
In the case of Swachh Bharat cess, it's easier to probably monitor that because that has not really been made available as a credit. And therefore, the extent of 0.5% of the entire amount collected during the material point of time, it's easily you can accord it that it's towards collection from Swachh Bharat cess. But the moment you allow an entitlement of a credit facility to a cess, that is where how much of a cess has really been collected becomes a difficult proposition. Was one of the reasons why I said it would have been a much better option to have merged it along with the service tax amount per se.
And another very touchy, fussy issue is arrest and prosecution in service tax. They have been playing hide and seek with this arrest and the prosecution provisions in service tax. Originally, when they introduced service tax, it was supposed to be a voluntary compliance and things like that. Somewhere in between, they introduced all these provisions, then they again removed. And today, there's a lot of publicity being given to top people of organizations being arrested for not paying service tax. Now, there are certain changes made in that, like the
2 crores.
Monetary limit has been enhanced to 2 crores.
And restricted.
Could you say something on that, sir?
And restricted only to those cases where you have collected the tax and not paid it. I have some difficulty with this proposition.
Exactly, yes, sir.
Because how do you prove, particularly when the burden of proof is on you,
Yes.
to show that I have not collected the tax? And there are instances where you have gone and said, this is inclusive of tax,
Yes.
and therefore please apply the explanation to section 67 and then give me the proportionality. And if that has been your industry practice, can you go and say that I have not collected this tax? Or is it only restricted for the purpose of valuation and not for the purpose of showing whether you have actually collected it over and above the gross amount charged for rendering that service? I think this issue has been there in all the arrest cases which are dealt with now, and it will continue to be there because that issue is not answered.
But how do you answer that issue, sir?
Only by suggesting that I have not claimed it on my invoice. by saying I have not separately charged, but when you have not issued an invoice at all.
You have not issued an invoice at all.
In those cases,
you are taking a claim that my service is not taxable at all, or what I was doing was not service at all. Suddenly the excise officer comes and says, you have collected and not paid the service tax, more than 2 crores, you are under arrest. How do we solve that?
You have to show contemporary evidence which is there by way of a contract or any other arrangement whereby you have told the customer that as of now you are not charging any service tax because both of you believe that it is not taxable, and if and when it becomes taxable he will pay. That should be one method to rebut, at least transfer the burden, to say that we never contemplated because we believed that it is not taxable.
Very true, but see, in fact, like see, some of the invoices or the template is simply copied upon to the extent where it says all duties, necessary duties and taxes have been paid. In such cases, it's really going to open up a Pandora box here. I mean, who is actually, when someone is issuing an invoice, who is reading the fine print of an invoice? The invoice, any invoice has in a very small font size, about 10 added lines. One of the added lines is simply all necessary duties and taxes have been discharged. I mean, we are going back to that 1.5 decade back where we used to struggle. How do we prove that we are not hit by unjust enrichment? The same kind of a difficulty is what we are going to face now. How do we prove that? How do we demonstrate that we have not collected the tax? And definitely, and as was rightly pointed out, the saga continues. Because the only difference is increase in monetary limit. All the cases we have seen has nothing to do with the monetary limits, because once they go, we are talking about an approximate sum of about 10 crores, 20 crores, 30 crores of demand. So with the monetary limit of 2 crores being set, I don't think it is really going to make a material impact on the prosecution proceedings, whatever we have been seeing in the last 2 to 3 years to continue.
There's a provision under 76 and 78 where the penalty proceedings against the directors will be closed if the main case is closed. I think...
yes, it's a welcome step.
Mr. Vijayanand, you are covered under any of these?
Until we go into the phase of a full-fledged infrastructure in India is built, so all sectors should be encouraged. So the service tax exemption for this metro rail, monorail also should continue. Similarly, the O&M expenditure on metro rail and monorail is also, for this sector there is no exemption, whereas ports and road sectors, the exemption is available. So this kind of a disparity, I feel it should be addressed and sorted out.
The pot rules, point of taxation. There's a big doubt whether they were valid all these days, whether they have been made valid now. If they are made valid now, what about the past period?
What has been done now? The point of taxation rules has been linked with, specifically with the provisions of the Act.
Yes, sir.
That link was
Missing.
not obvious. I won't say missing, not obvious. According to me, if you look at even under the previous dispensation, we had section 66B and section 66C. 66C dealt with place of provision. Provided, agreed to be provided, deemed to be provided, deemed to be agreed to be provided were covered under 66C. But 66B did talk about as provided, time and place as provided under these rules, as may be prescribed. It didn't specifically point out to point of taxation rules. Then we brought in 67A in terms of, so whether there was a conflict there itself, merely because it restated something which was already the law, namely right from the Reliance decision in Ahmedabad, whether the time of performance, did we go back to that situation? That was the question at that point of time.
Yes, sir.
And these rules were also subsisting. Therefore, you have to harmonize both 66B as well as 67A and not read out of context. I think what they have done now, according to me, is that they have clarified this position, saying that harmoniously these two have to be read. and therefore added this explanation by specifically bringing reference to the point. All that the amendment has done now is to bring in, if you see, a specific reference to 67A, and in 67A talk about the point of taxation rules.
Correct.
So therefore, what was implicit according to me in 66B
Is made
has
apparent
been
now.
made explicit now. Therefore, it has not lost its vitality right from the beginning.
That's the important point.
The position was never unsettled. The
the
position was
position-
fairly settled actually. It has now been made explicit.
That is how one would have to harmoniously read these two. Of course, there may be challenge because there was a challenge already.
Yes.
There was a challenge already, and
Correct.
therefore in that challenge, whether this has effectively dealt with that challenge or not will have to be seen. And all that they have said is that the time or the point in time when with respect to rate of service tax shall be as may be prescribed.
Yes. That as may be prescribed was not there earlier.
Yes. Why? No, it was there in 66A.
66. Yes. Not in 67A.
But when they put 67A, they did not have it.
Yes. Because 67A actually came after pot rules.
66B.
Yes.
Because this came on 1/4/2011, effective 1/7/2011.
Right.
So I don't think that on a harmonious construction, you can't read them in bits and pieces. On a harmonious construction, there is this is a clarificatory provision, and I think that it would be sustained in my view.
Sir, one cess that we forgot was that infrastructure cess on automobiles. Like so many cesses being on us, maybe one word on this cess also. The doubt that an automobile industry asked me was whether all the cars manufactured up to 29th of February are liable for this cess. This, of course, is notified under the Provisional Collection of Taxes Act. But a new levy which has come into force, say from 1/3, is it applicable to the cars already manufactured? Mr. Raman, what do you think?
I would say prospective.
You would say prospective.
Yes,
The
because
pre-budget cars are exempted. Actually, cars have stopped. It's not jewelers and garment industry alone which is protesting. It seems the cars have also stopped rolling because there's no clarity on this. We can't get into a big discussion on the applicability of excise, the date and all that. But this being a new levy, is it applicable for the products already manufactured?
That decision in that Wazir Sultan Tobacco Company's case will apply, where they said that if it is a new levy, it will be only prospective.
But they have, there is a feeling in the department that any clearance, not only in the department, some car manufacturers themselves believe that the previous manufactured cars also. Sir, you may notice, they have made a small change to Section 5A also in this budget. Sir, the situation is, a notification comes into effect on the day it is published. And there was a clause that made available for sale by the Directorate of Publications. So, the day the North Block issues the notification and makes it available for sale by the Director of Publication, it is law. And often the notifications come late in the evening. And sometimes, as you know, in government offices, backdated things also come. Say, for example, your tariff value rates, your exchange rates. For example, if exchange rates are changed by a notification today, the notification is issued around 5 o'clock or 6 o'clock today. It is effective from midnight of yesterday. There was no way that you could know about it. And the little problem they had was that it had to be made available for sale by the Directorate of Publication. How do you know whether it was made available for sale? After all, they don't have a shop there which you can go and knock and ask, have you published any notification today? Is there any new notification for sale? So, nobody could question that also. Then the other way of making a notification available was through the Gazette. We never knew when the Gazette used to be printed. So, now the Gazette also has stopped printing. They have gone the e-Gazette. And in this budget, they have amended Section 5A to stipulate that notification would come into force on the date it is published in the e-Gazette. So, the moment it is deemed to be published in the e-Gazette, it is the law. But you have a very, very valid point that there is no reason to make something effective from 4 hours before you issue the notification. Everyone knows that it's only at 11 o'clock or 10 o'clock that people reach the office. At that time, even if they issue a notification saying it is effective from yesterday's midnight, how do I manage my accounts? In fact, even the customs, when they have to assess a bill of entry, they are not aware of the latest rates. So, they will again call you back and ask you to pay. Sometimes they may even penalize you for that. So, this is certainly a very, very important thing. And anything else, you would like to add anything, sir?
I would only want to add one thing more, namely that Hyderabad, Bangalore, or for that matter Gurgaon, Mumbai, where there have been IT and ITES services, the problem of refund claims which were promised, which was addressed by board circulars by saying get a chartered accountant certificate, pay provisionally, but all of them are still waiting like volcanoes because of the fact that they have not been finally dealt with. Those cases, as indeed we had a formula for rule 6 of the Senvat credit rules, could have been addressed by saying that you can come clean, or you can have 50% or 25% or 75% of whatever you are fighting for, unless you felt so strongly that you are entitled for the whole thing. Have some methodology by which, or a rebate industry wise, so that all past cases could have been, thousands of crores are involved and those are just languishing at various levels. I think nothing has been done in the context of rule 5 to address this problem.
No, but are you prepared to accept 50% or 75% refund?
When
sir?
you have given a DRP for the purpose of 25% and repeated the same thing, you could have said this. And you have done it under rule 5B in the context of some specified services where you have given a rebate.
But two quick things on that, sir. One, though not as a part of the budgetary exercise, all of us know that on November, second week of November, we had the circular setting out the process for accelerated refund claims. So that was actually provided for even as a part of the pre-budget exercises in November. Now, probably one glorious thing about the budget is a kind of finality as to what relevant date is for filing service tax refund claims. Now, especially considering the fact that the mega judgment as passed by the Sistat Bangalore, one of the cases when it went before High Court, the Kyocera judgment was
High Court.
192 cases are to be reheard.
Yes.
Exactly. So, at least to that extent, the fact that we have now visibility on what is relevant date in an either or situation, at least relieves us much of the tension from a typical service tax refund claim position.
But those claims are pending. Nobody wants to pay them. And how many of them have given this chartered accountant certificate and got back the refunds? Hardly anybody.
Cash flow problem remains.
Cash flow is a major problem, and once you have got that problem, how will you carry on your industry?
Technically speaking, 85% of the refund claims, like pre-audit does not really have to go to pre-audit. It can be released, at least a percentage of it. It is well provided for. So, probably it's not a circular or a notification we need to look for. It is basically a mindset change at the revenue authorities at the ground level.
Well, before that mindset comes, what he suggests is some solution. The mindset change is a long drawn out process, and maybe something is happening, like this budget, for example. At least a beginning is made, or things are turning a little SSC friendly, or as he says, the ease of doing business is not ending up as the disease of doing business. I think things are looking up bright. So what we have found out in our very exciting discussion was that this is a very welcome budget. Several good changes have been made, but as always, there is more to be done.
Before I wind up this episode, let me thank all the 5 guests and my editor, Mr. Vijay Kumar, for making it a highly intoxicating debate. All the panelists have very clearly pointed out that if the government would have increased the service tax rate by 1 or 2%, it would have caused less hassles than paying less in the form of multiple cesses, as some of them are syndicatable, others are not. They have also indicated how different market practices with respect to inking various sorts of details on the invoices sometimes tend to give the impression that the SSEs have collected service tax in their inclusive price, whereas the truth is otherwise, either sheer ignorance or half-baked advisories. But this leads to a theory which is commonly and perhaps conveniently followed by the revenue, that is, tax collected but not paid, and it leads to arrest in service tax. Now that the threshold has been hiked to Rs 2 crore, it may lead to fewer arrests in the next fiscal. With the end of this episode, we bring the curtain down on our post-budget analysis series, and I am sure TIOL viewers must have enjoyed watching them. Thanking you all for your valuable feedback, and we would certainly try to make your experience much more richer with us next year. Thanking you all for watching TIOL Tube.